Good morning. This is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda. President Biden warns Israel against attacking Iran's nuclear sites as he seeks to de-escalate tensions in the Middle East. The G7 considers ramping up sanctions on Tehran. The world-beating rally takes a breather as Chinese shares drop in Hong Kong. In Japan, the yen weakens as the new Japanese Prime Minister casts doubt on further BOJ rate hikes this year. And the French president endorses a temporary tax hike on the country's biggest companies to rein in the budget deficit. We will bring you more from our exclusive conversation with Emmanuel Macron. European futures pointing lower then after both European and US markets ended Wednesday essentially flat. The moves are right now. Risk off seems to be the sentiment. Stronger dollar is at play as well. European futures pointing lower by 0.6%. The FTSE 100 here in the UK looking to lose around 42 points, down 0.5%. S&P futures stateside looking to drop 0.2%. And Nasdaq futures also lower by around 62 points. Let's flip the board and have a look cross-asset. The assessment and the reassessment around where the Fed goes continues to be part of the play, with yields up in the session yesterday as the 10-year closes in on a level of around 3.8%. Before we get to the cross-asset board, let's reflect on what's happening in terms of the Asian session, with a focus back on Japanese equities. The Prime Minister coming out with a surprise comment around the need to be cautious around any potential hikes from the BOJ. That led to a reassessment, softer yen, and of course that led to strength coming through. And you're seeing that now reflected in Japanese equities up 2%. We'll get more on that story through the hour. In terms of the yen then, 146. The softness is there, currently down 0.2%. The story in China is one of weakness in property stocks and a sell-off as well in some of the big tech names listed over in Hong Kong. A bit of a breather after 13 consecutive days of gains coming through for Chinese stocks listed over in Hong Kong. The HSI currently down 2.7%. Broadly across the Asian MSCI Asia Pacific, the regional benchmark, you're seeing losses of 0.6%. Let's have a look cross-asset then. I mentioned the US 10-year, the reassessment given the jobs data that came in. ADP numbers slightly stronger than expected. We are building up, of course, to non-farm payrolls, that data print on Friday, which will round out the labour market detail that we've got through this week. There is still some evidence, though, of cooling when it comes to ADP on a 3-month average basis. 3.79 is the yield right now on the benchmark 10-year, close to that 3.80 level. Euro dollar at 110. Again, strong dollar at play there, softer on the single currency by 0.1%. Brent 74.76, up 1.2% with a clear focus on the tensions in the Middle East. Gold at 2,655, just down 0.1%. Let's get more details then on what is unfolding, of course, in terms of the potential Israeli retaliation to Iran. The US urging Israel not to attack Iran's nuclear facilities in retaliation for this week's missile barrage on Israeli cities. President Biden says he plans to speak with Prime Minister Benjamin Netanyahu as the US and G7 allies plan further sanctions on Iran. For more, Jemana Pasechi, our Horizons Middle East and Africa anchor, joins me with the details. Jemana, what could Israel's response look like? We are expecting a response. We don't know the time frame, but what are the options that they may be looking at?
And indeed, there is broad-based support within Israel for this response to come soon and for it to be powerful. Even the opposition leader, Yair Lapid, is saying Iran must pay a significant and heavy price. And then you have more hawkish voices within the Israeli government. Naftali Bennett saying Israel should destroy Iran's nuclear program and its central energy facilities. So those are some of the voices that are coming through from Israel. Now, in terms of their options on the table, we're not privy, of course, to what they're thinking, but these are some of the options that are being discussed. The first is the response could include airstrikes from fighter jets, similar to what we had back in April when they specifically targeted an air defense battery. It was a very targeted strike on this air defense system. system. It could also take the form of clandestine operations similar to the taking out of Ismail Haniyeh that happened back in July. And of course, Israel never actually took direct responsibility for that. But it could be more targeted assassinations at the IRGC level. The other option that is being discussed, and which is why we're seeing such a big impact on energy markets, is Israel could also choose to target energy infrastructure. And here, specifically speaking to some of our energy colleagues on the BN side, they say that they could go after some of Iran's processing plants. There's one in particular called the Persian Gulf Star Refinery that is responsible for about 45% of daily gasoline that is consumed within Iran. So the product out of that refinery is mostly directed towards the domestic audience, which means in terms of global implications, it would be more contained. So that could also be one of the potential options on the table. And then, quite literally, the nuclear option would be for Israel to target some of Iran's nuclear sites. And of course, the whole world, the IAEA, has flagged that they're sitting very close to weapons-grade nuclear material. But of course, if that did happen, it would mark an extreme escalation. And the U.S. is trying to convince Israel not to go down that route.
OK, so some of the detail on options for Israel, potential options at least. And you mentioned the US, Jemana. What have the US been saying as Israel apparently builds up to this response?
Well, I think it is first very clear that the U.S. has said that Israel fully have the right to defend themselves. And Biden was asked about the Israel reprisal or likely reprisal yesterday. And he said all 7 of us, and this is in reference to the G7, agreed that they have a right to respond, but they have to respond proportionally. Now, the G7 had an emergency phone call yesterday to discuss putting out a statement and potentially introducing further sanctions on Iran. There's a 2-day Interior Minister G7 meeting taking place over today and tomorrow. So looking for a statement coming out of that meeting as well. But it seems as though the U.S.'s role in all of this is clearly standing by Israel, their ally in the Middle East, and supporting their right to self-defense, but at the same time trying to exercise some diplomatic influence to keep the response restrained.
OK, Bloomberg Horizons Middle East and Africa anchor Jemana Pasedji on the latest, joining us out of Dubai. Now, from the geopolitics of the Middle East to central banks, and a reaction coming through in terms of comments we've heard from the new Japanese Prime Minister, Shigeru Ishiba, sparking a sharp slide in the yen after he said the country was not ready for higher borrowing costs. His comments have pushed back expectations of another central bank hike this year and raised concerns about his communications to the markets. For more, I'm joined by Bloomberg MLive strategist Mark Cranfield in Singapore. Mark, the Prime Minister, Ishiba, he seems to have gone from hawk to dove on BOJ policy. What's going on?
Well, foreign exchange traders think that Christmas has come early, basically. They were looking at the month ahead, thinking it was going to be pretty dull in the foreign exchange world. You've got the US elections coming up in early November, plus the Fed meeting. And they were thinking that there'd be too much confusion, a lot of caution. Nobody would want to do anything. Along comes the Japanese Prime Minister in conjunction with the Bank of Japan governor, and they basically give a green light to foreign exchange traders to go and sell the yen, at least for the next few weeks anyway, because the Japanese election is not until the end of the month. So really, they can't believe their good fortune. And on top of that, you look at the jobs data you were talking about earlier, the private sector one in the US, that's given a bit of a bid to Treasury yield. So there's a little bit of momentum anyway for the US dollar from the point of view of a touch higher in the US yields. Then you get this, what seems like a one-way skew in terms of the yen, is that they don't want to raise interest rates. So that's going to surely play out in the yen, particularly when you consider that positioning, the market was very neutral. At the beginning of August, when we had that huge rally in the yen, it was very much skewed towards people already being short of the currency. So they needed to quickly scramble to cover their positions. And of course, we had intervention as well. It's a completely different scenario this time around. Those positions have mostly been washed out. Traders were thinking that they shouldn't be doing too much, keep positioning very light until the US elections. Now, they're fairly early in the month. They've got a few weeks to play with. And they seem to have been given a fairly clear direction by the Japanese Prime Minister. Really, they can't ask for anything more. Dollar yen, people already in Asia today are talking about the risk of it going to 150, 155. That wouldn't now be out of the question when you consider that they have time on their side and that we may have an employment report tomorrow, which is slightly on the strong side as well.
Okay, 150, 155 for the yen, currently at 146 versus the US dollar, so down 0.2%. You talk about the jobs market and how that plays in, the US jobs data, how that ties into what's happening in Japan. How significant do you think the print is, Mark, that's going to come through on Friday in terms of the assessment for the Federal Reserve and in terms of how it ties into the dollar and bonds? Yeah,
really, it's the last chance. If anybody still is thinking that the Federal Reserve could cut by 50 basis points again in November, really this jobs report is the deciding factor. You can see the market has already been withdrawing those bets to some extent. They're not as gung-ho on the idea of consecutive 50 basis points cuts. But if we get a surprise in the employment report, it would certainly put it back on the table. At the moment, that doesn't appear to be the case. The estimates for the unemployment rate itself is to stay at 4.2%. And that's really the deciding factor. That's the one that we've seen earlier this year when that number jumped to 4.3 unexpectedly. That triggered off a whole rally in the Treasury market. Bonds did extremely well, and the dollar sold off a bit because of that. This time around, people are thinking the jobs report is going to be a pretty solid number overall. 4.2 will remain, and that probably isn't enough to push the Fed towards a bigger cut. They will surely go ahead and do 25 basis points. That's been pretty much the strong indication from Jerome Powell and other speakers. But really it needs a very weak jobs report in order to push them further. If we get a benign report, Treasury bonds will probably flatten in terms of the yield curve to some extent, and the dollar will get a little bit more of a bid. And as we were just discussing, the yen is probably the currency that will be most affected by all of that.
OK, Bloomberg M-Live strategist Mark Crailford on the importance of that non-farm payroll data crossing tomorrow in terms of whether or not we get that 25 basis points or that jumbo cut from the Fed at the next decision. Mark, thank you. Let's switch focus to French politics right now. French President Emmanuel Macron has given his backing for a new temporary tax on large companies as he looks to tackle his government's deficit. He was speaking on a panel moderated by Bloomberg's Stephanie Flanders at the Berlin Global Dialogue.
Having an exceptional taxation on corporate is something which is well understood by large companies, if this is for 1 year, given the level of effort which should be made. But it should be limited, and we don't have to forget, we have not to forget the reality of our economy, the reality of our competitiveness and our position.
OK, the French president speaking to us there. Let's bring in Bloomberg's Caroline Connor in Paris for the context. Caroline, Macron was also pushed on some of the domestic challenges, of which there are many, of course, that his new government is currently facing. Anything that stood out to you from his response?
It actually is quite surprising, this response, because usually when Macron is abroad, he doesn't talk about domestic issues. And since the Prime Minister, Michel Barnier, was named about 4 weeks ago, he has not been involved at all in any of the choices, in any of the comments from his new Prime Minister. And at the same time, he's abandoning his own philosophy of never raising taxes, and this has been his mantra for the past 7 years since his first election in 2017. So on top of that, he's obviously officially backing whatever budget the Prime Minister is going to present next week. Given the deficit is going to reach more than 6% this year, Michel Barnier is now looking for 60 billion euros of savings. That's what we also found out from the Finance Ministry yesterday afternoon, in order to bring the deficit back to 5% next year. We know this exceptional tax on multinationals is going to be temporary. Macron, you heard him saying it's going to last for 1 year, so that's supposed to be only in the 2025 budget, and it should raise about 8 billion euros to the state coffers. That's according to French press. We also heard from the business lobby, MEDEF. They see this new tax as a prerequisite to restore a balance of public finances. And finally, we heard from one CEO already, the Total Energy CEO, Patrick Pouyanné. He said that is unfortunate, but it should have a limited impact on Total because anyway, they pay most of their taxes abroad.
Caroline Conard, thank you very much indeed with the reaction to what we've been hearing from the French president, of course, speaking to Bloomberg at the Berlin Global Dialogue. Caroline, thank you. To the UK right now. Focus on the pound as the pound moves lower by around 0.5%, a drop in the pound versus the US dollar. This is on lines coming through from an interview that Andrew Bailey, of course, the Bank of England governor, has been given and has given to the Guardian newspaper, in which he says, and I'm quoting from the Guardian, that the bank, the BOE, could become a bit more aggressive, quote, a bit more aggressive in cutting interest rates, again, providing the news on inflation continued to be good. A couple of other lines coming through from this interview, again, with the BOE governor to the Guardian, saying that the economy was more resilient than expected, living cost pressures not as persistent, and he's watching the Middle East events very closely. Again, the key line that appears to be moving the pound lower is that he sees a chance of more aggressive rate cuts. Coming up, OpenAI's latest funding round values it at just $157 billion. $157 billion. We're going to look at who's backing the mega startup next. We're also going to discuss OpenAI, of course, and the boom in AI investments later in the programme with YT Boon from Neuberger Berman on how to invest around the Gen AI hardware and software ecosystem. That's coming up. This is Bloomberg. Welcome back. Now, OpenAI has raised $6.6 billion in its latest funding round, valuing the company at $157 billion. Let's bring in Bloomberg's Annabelle Drulas for the details. Annabelle, OpenAI then now, with this fundraising, and Bloomberg had reported around some of this prior to the details today, suggests that, and puts it really in a category to some extent of its own, one of the most valuable startups in the world right now, alongside SpaceX and ByteDance. This is truly a big moment.
Yeah, that's absolutely right, Tom. I mean, it's a very, very exclusive club that OpenAI is sitting in, as you say, one of the most valuable startups in the world. And it certainly just tells you how much tech industry titans continue to believe in the use case for AI into the future. Some of the key details around this, well, the latest fundraising was led by Thrive Capital here. They tipped in about $1.3 billion. We're told Microsoft, which is the biggest back-to-date contributor, around $750 million. Others include Khosla Ventures, Tiger Global in Asia. You've got SoftBank as well. This chart here just taking a look at its estimated valuation, or what it fundraised at, which was $157 billion. So a lot of different high-profile names in this. But the question, of course, is how does OpenAI plan to use this cash, given they've got that sort of path to be working through? They did actually put out a statement talking about the funds, and they're going to be putting it toward AI research and also adding compute capacity. So again, a huge valuation is something that's certainly transfixing a lot of people in Silicon Valley.
Well, yeah, indeed. It's a huge ticket number, isn't it? So to some extent, it's indicative of that continued demand then for exposure to some of the leading names in the Gen AI space. But does the valuation cause anyone concerns? Are there any eyebrows being raised about the sky-high valuation around this business?
Yeah, there's certainly some people that, of course, continue to sort of pour a little bit of cold water over this AI hype, and it's sort of that use case. And it is true, I guess, we're yet to really see a real-world breakthrough or application for AI technology just yet, and something that really comes into the mainstream. But a story that's done very well in terms of our readership is an interview that Bloomberg did with Daron Acemoglu. He is the renowned MIT professor, and basically he's saying that, yeah, at a time when you've got AI stocks that are really outpacing the broader market, and you've got every single industry pretty much looking at job disruptions, he's not saying it's going to go that far. He's saying at best, only 5% of roles are looking to be replaced by technology or that technology. So the focus, of course, then, okay, where do we go with the investor mania? He's looking at 3 different scenarios here that you can see mapped out. So the first is that the hype sort of cools over time. In the second one, the frenzy builds for another year or so, and then you lead to a tech stock crash. And then in the third scenario, you end up having mania that basically goes unchecked for years. And that is what he sees, a combination of 2 and 3 as the most likely scenario here that could have, Tom, some economic consequences.
OK, a warning there from someone who, of course, has deep insights on this space. Bloomberg's Annabelle Drulis in Hong Kong on that raise coming through from OpenAI and some caution maybe around its valuation and what it tells us about the buzz around Gen AI. Annabelle, thank you. Coming up, counting the costs. Hurricane Helene. Insurance losses are expected to reach more than $6 billion, just shy of the amount raised by OpenAI, and potentially disrupt the solar and chip-making industries. We'll explain why next. This is Bloomberg. Now, the destruction from Hurricane Helene is expected to cost insurers roughly $6.4 billion. That is according to an early estimate, at least, from catastrophe modelling firm Karen Clark and Company. It's also shut 2 mines in North Carolina that together produce about 80% of the world's highest quality quartz. The material plays a crucial role in the production of solar panels and semiconductors. For more in terms of the implications, I'm joined by Jenny Chase, lead solar analyst for Bloomberg NEF. Jenny, why are these mines so important? Why is this production so important to the solar and to the chip industries? What are the potential implications?
So this is really pure quartz. And what it's used for is not for making the silicon itself. It's used for making the crucibles in which the polysilicon is poured and allowed to cast into single crystal ingots. And specifically, it's for the inner layers of the crucibles because the middle and the outer layers don't have to be quite that pure. It is quite critical, but you can also use synthetic quartz, of which small volumes are in production. It's just a bit more expensive. And there are other mines that are not around the world that are not fully qualified to do this yet, but could be.
OK, so it's about the production then of those ingots that, of course, are used, the polysilicon, of course, the foundations really for solar panels. Does the shutdown, to what extent does it expose once again for us, Jenny, and this is a space you monitor very closely, the potential vulnerabilities or the very real vulnerabilities in terms of the supply chains around solar and semiconductors?
Well, I think the story has been massively overblown, so I don't think it exposes the vulnerabilities that much. I mean, extreme weather events due to climate change are on the rise, but the solar and semiconductor industries are not the main ones we should be worrying about. OK, they're not the main ones. Well, which are the ones that we should be worrying about then, Jenny? Agriculture, food, the things, because you only need the world only uses about 20 to 30,000 tons of this ultra-high purity quartz, which means that there is inventory in the supply chain. The companies that make crucibles have the ability to withstand some shocks. It's the things that we need large volumes of that are more of a problem and for which there is no alternative. OK, so it's a volume story and agriculture is front and centre. Jenny Chase, lead solar analyst for Bloomberg NEF. Thank you for the context around what we're seeing in terms of the destruction from Hurricane Helene and taking out some parts, of course, of the solar industry ecosystem supply chain, at least for now. Jenny, thank you. Now, the BNEF summit where energy, finance and technology converge kicks off here in London next week with a stellar lineup of guests. You can join virtually using the QR code on your screen. You can scan that right now. That all starts on Tuesday. Really smart analysis will be laid out for you within this space on Tuesday here in London. You can sign up for it there. Back to the markets right now, where European futures are pointing low by 0.5%. There's been a sharp move lower in the pound on the back of an interview that Andrew Bailey of the Bank of England has given to the Guardian newspaper, suggesting that there could still be an opportunity for, quote, aggressive cuts from the Bank of England if inflation continues to move towards that 2% target. European futures down by 0.5%. S&P E-minis down 0.2. Stay with us. This is Bloomberg.
Good morning. This is Bloomberg Daybreak Europe. I'm Tom Mackenzie in London. These are the stories that set your agenda. President Biden warns Israel against attacking Iran's nuclear sites. As he seeks to de-escalate tensions in the Middle East, the G7 considers ramping up sanctions on Tehran. The world-beating rally takes a breather as Chinese shares drop in Hong Kong. In Japan, meanwhile, the yen weakens as the new Japanese Prime Minister casts doubt on further BOJ rate hikes this year. Plus, OpenAI completes a funding round at a valuation of $157 billion, catapulting it into the ranks of the world's most valuable startups. Nvidia, SoftBank, Microsoft are amongst the backers. Let's check in on the markets right now then. And the sell-off in China, in Hong Kong, has actually moderated. The HSI is still down. We'll get to that in terms of the details. But the handoff is less grim than it had been an hour or so ago. Nonetheless, European futures are down by 0.5%. FTSE 100 futures off by just 10 points so far. S&P E-minis pointing lower by 0.2% after a fairly lackluster day yesterday for both US and European stocks. Nasdaq futures down 0.3%. Let's flip the board and have a look then at the Asian session. It really is still all about the China story and Japan. That surprise coming out through from the Prime Minister of Japan. He came out after a meeting with the governor of the BOJ, Ueda, and suggested that he was in no mood to see additional hikes from the BOJ. So you've got softer yen, and that's given support for Japanese stocks. Currently, the Nikkei up 2%. The Japanese yen down, currently a 0.1% at 146. Over in China, very different story, but it's selling pressure coming through. But again, it has moderated quite significantly. You had seen selling pressure of around 4 or 5%. Now you're down just below 2%. Property stocks were hit. Maybe some profit taking, 13 straight consecutive days of gains. The HSI currently down 1.8%. The broader MSCI Asia Pacific for the region currently down 0.5%. Let's flip the board and look cross asset then. Some repricing around the Federal Reserve, given the slightly stronger ADP data that came out yesterday. We look ahead to non-farm payrolls on Friday. You're close to 3.8 on the US 10-year, 3.79 right now. The currency at the moment, it had been the yen. The pound says hold my beer because the pound is down 0.6%, 131 pound versus US dollar, on comments from the Bank of England Governor Andrew Bailey to The Guardian saying that aggressive cuts could still be part of the playbook for the BOE if inflation continues to moderate. So pressure on the pound on the back of those comments. Brent 74.79, continued concern, of course, about the moves in the Middle East, currently up 1.3%. Gold at 2,652, down 0.2% on the yellow metal. Let's get back to that story then in the Middle East, that escalating conflict in the region. President Biden says he plans to speak with Prime Minister Benjamin Netanyahu as the US and G7 allies plan further sanctions on Iran. That comes as the US urges Israel not to attack Iran's nuclear facilities. Let's bring in our reporter Dan Williams, who joins us out of Jerusalem. Dan, thank you for joining us. What is Israel looking at right now in terms of the potential response, and is it heeding these warnings from Washington?
Good morning. Well, this might have been expected, but just 36 hours ago, the United States assumed a new tack in its tone on Israel on this escalating conflict. It spoke in terms of Iran facing what it called severe consequences, and said it would be working alongside and with Israel on those consequences. Now, any expectation that might have engendered of, say, joint strikes on Iran appear to have been dashed now with those statements by President Biden. Perhaps unsurprisingly, an Israeli strike on the nuclear facilities of Iran would be really a region-rattling event. It's unlikely that this outgoing US president wants that to be his legacy. It's unlikely he would want that potentially to crash the prospects of his vice president, Kamala Harris, in the US election that's just a few weeks away. I doubt the Israeli leadership was surprised by this. Also, it might be doubted that the Israeli leadership is ready to take it alone, take this attack alone, and go it alone against Iran and its nuclear sites. We've been hearing threats like that for about 15 years now. And really, there's some doubt as to whether Israel has the military capacity to exact lasting damage on those very well protected sites, especially now they'll be especially protected. And keep in mind that Israel is actually already in a multi-front war, which is stretching its resources and its forces. So I doubt there is any great surprise on either side that these statements have come out now.
OK, Dan, on that multi-front war then, as we look at a clock that appears to be ticking down to some unknown time as one Israel strikes Iran, on the northern front with Hezbollah, what is the latest on the ground in terms of the fighting that continues there?
I think there's no doubt that that is where Israeli forces are now most active. They went in with a larger scale incursion than we've seen previously just 2 days ago, while revealing, in fact, to the world that they had been mounting smaller scale incursions for months to gather intelligence and to prepare. As of yesterday, Israel lost 8 soldiers killed in clashes with Hezbollah, all of them from the special forces, 3 of them officers with a rank of captain. That would definitely appear to have dented Israeli spirits, but I don't think there is any doubt among the Israeli public that this mission, or this escalated mission on the ground against Hezbollah, is necessary in order to dislodge Hezbollah from southern Lebanon and eventually enable the return of some 60,000 Israeli residents of northern towns and villages who were displaced by attacks from Hezbollah that have been waged since October 8th, just one day after Hamas began this war from the Gaza Strip with its surprise cross-border rampage.
OK, Bloomberg's Dan Williams in Jerusalem. Thank you very much indeed with an important update, of course, out of the region. We appreciate your time and, of course, the analysis. Now, to the UK and ties with Europe. The UK Prime Minister has promised to, quote, stand firm during what are likely to be difficult negotiations to forge closer ties with the European Union. Keir Starmer made his first visit to Brussels as British Prime Minister yesterday, meeting with Commission President Ursula von der Leyen.
We are determined to put this relationship back on a stable, positive footing that I think we all want to see.
Our alignment on global affairs provides a good foundation for our bilateral relations. And we have a set of solid agreements in place. We should explore the scope for more cooperation while we focus on the full and faithful implementation of the withdrawal agreement, the Windsor Framework and the TCA.
Well, Bloomberg's UK correspondent Lizzie Burden is in Brussels and joins us now. So, Lizzie, is this a new dawn then for UK-EU relations with Keir Starmer in the driving seat?
Well, Tom, I arrived in Brussels to a rare sight at the European Commission. The Union Jack flying here. It was here yesterday, it's gone today. But that was an incredibly frustrating press conference, again, from Keir Starmer last night. More vibes, no detail. He says that the tone is important when it comes to resetting that relationship with the EU. But privately, even EU officials are frustrated by the lack of nitty-gritty, the focus on the messaging. And just like at home, where the UK newspapers have filled the policy vacuum with stories of freebies and number 10 infighting, EU officials are filling this void with ideas of their own. They'd like to see a youth mobility deal. They'd like to see reassurances when it comes to fisheries. And while Starmer was clear in ruling out a return to free movement of people, to the customs market, to the single union, actually, he refused to rule out deals on those two big asks from Ursula von der Leyen.
OK, Lizzie Burden, thank you very much indeed on the ground for us in Brussels on that visit, of course, by Keir Starmer, as he tries at least on the edges to improve relations with Brussels. Now, talking of Europe, French President Emmanuel Macron says Europe is no longer a priority of the US. Speaking at the Berlin Global Dialogue, Macron discussed the importance of the upcoming American election and what a second Trump presidency would mean for Europe.
I think it could have consequences of the defense and security part of the agenda, for sure.
Good consequences.
Consequences. But I think we should be, honestly, I don't want to speculate on the US elections. My point, more than that, is that US is a very strong partner. This is a very important ally. But whoever will be elected and whatever the administration is, I think we have to be lucid on our situation. Europe is no more the top priority of the US. The US top priority is US, which is normal and fair. The second top priority is China. and for the rest, it depends on the moment. They are super loyal and reliable partner on Ukraine. Will it last? I don't know. But let's be clear, at the same time, in Afghanistan, we didn't have the call before, and in the AUKUS deal in Australia, I didn't have the call before. But it's not a reproach. I try to be lucid. The EU is not the priority of the US. And this is why part of the wake-up call period of time we are living, and part of what we have to completely reshape, is our defense and security strategy. We are part of NATO, no discussion. We are a strong ally of the US, no discussion. But we have to de-risk our model from the US agenda. This is why we have to invest much more for ourselves. We have to create much more European solutions. We have to preserve much more our financing for European solutions. This is a top priority.
OK, French President Emmanuel Macron speaking at the Berlin Global Dialogue. Now, some other stories making the news this Thursday. US prosecutors say Donald Trump should stand trial for his, quote, private crimes in trying to overturn the 2020 election. The newly unsealed court filing alleges that when told that Vice President Mike Pence could be in danger at the Capitol during the riots, the former president replied simply, "So what?" The special counsel files come after the US Supreme Court held that presidents in many instances cannot face charges for official acts while in office. US prosecutors are broadening a probe of potential price fixing by SAP and Microsoft. The Justice Department sent Microsoft a legal demand for documents on 94 civilian government agencies with which it has done business for SAP products. The company characterised the prosecutor's demand as, quote, dramatically expanding a civil probe that was already examining whether the companies overcharged the military. Mercedes and BMW are pressing Berlin to vote against imposing significantly higher EU tariffs on Chinese-made electric vehicles in a push to avoid a spat with their most important market. It comes as member states are preparing to vote tomorrow on imposing definitive tariffs as high as 45% on imported EVs made in China. And talking of made-in-China EVs, Chinese automaker XPeng, which has partnered with VW in China, is looking at several options in Europe to localise production and sidestep tariffs on Chinese-made EVs. The company's vice chairman and co-president Brian Gu spoke with Oliver Crook in Berlin.
Being more local is not because tariff, is not only because tariff. Because as a company has aspired to be a leader in a market like Europe, we have to think about becoming more local. You know, we have to have more local team to build our local brand and also have more local presence. And also, you cannot rely on an export-only strategy to deal with a local market like such a big market like Europe.
OK, coming up, I'm going to speak with Boon from Neuberger Berman for his views on the biggest opportunities for AI investments. That conversation is next. This is Bloomberg. Welcome back. Now, shares in Nvidia are up in extended trading. This after CEO Jensen Huang told CNBC that the demand for the company's Blackwell chips is, quote, insane. The comments come amid concerns about engineering snags that delayed the release of the chip. And sticking with the AI space, OpenAI, in which Nvidia has just, of course, invested a little more, has completed a deal to raise $6.6 billion in new funding. This latest round takes the giant startup's valuation close to $160 billion US. It comes as countries are scrambling to develop their own capabilities at producing AI accelerators, semiconductors. So for the details on how to invest around this space, let's bring in Boon, head of Thematic Research and in terms of Asia and portfolio manager at Neuberger Berman. Thank you very much for joining us in the studio. You've been here in Europe for a couple of weeks. You've been meeting with clients. Been lots of questions about generative AI, how to invest in this space. I want to start with the demand question around GPUs, given what we heard from Jensen Huang. What is your outlook as we push into 2025? for those AI accelerators? Does it stay at the kind of levels, eye-watering levels we've seen so far, or is there a bit of a slowdown coming?
I think, in fact, is actually accelerating. Given actually what we've seen over the summertime, if you remember the delays, in fact, demand has actually accelerated even more. I think demand for AI accelerated computing platforms are actually not slowing down. The delay has actually, or delay of new products, have actually caused even more eagerness of these spending and purchases as there's a race in this AI space. As we look at the cloud companies, the US big tech companies, they're not looking to slow down.
The hyperscalers.
Yeah, that's hyperscalers, in fact. And more importantly, this is a strategic industry, not only for the tech sector, but also broadly for the global economy, because it's about efficiency improvements as we face more aging problems, as we face more labor shortage problems. Hiring the best talents aren't always easy. And artificial intelligence helps to improve a lot of that efficiency. And I believe down the line, it will enable a lot of new applications.
So I was speaking to Aberdeen's Director of Tech Investment a few weeks ago, and he said he has clarity. He feels like he has clarity in terms of the CapEx spend on some of this infrastructure around Gen AI in 2025. But then he says 2026, it becomes a lot murkier. Does that chime with what you're seeing?
Well, it really depends on what we're talking about here, because within the CapEx spending, we have to look at it from different aspects, because there are, for example, computing spending, there are also networking spending, then also storage spending. While compute might slow down because it's cyclical, right? Once you're finishing your installation of GPUs, you need more networking. So I think going into 2025 and 2026, while compute has built up, networking demand will increase. Obviously, we still haven't gone through the storage cycle, so I think that's another very exciting area as we move into 2026 and beyond.
So I want to get your views on how to invest around this space. But in terms of that view on the CapEx spend, the hyperscalers, the pushback would be you've already seen in the earnings some angst from investors about the spend that's coming through. There will be a pain point, some would argue, at some point where investors basically strike and say this is too much, we're not seeing that ROI. And we haven't yet seen it to match the CapEx. That would be the pushback.
Yeah, in fact, I think a lot of people are looking at, say, one single killer app because of what you're looking at, the ROI. I think over time, what we're seeing is not just one single killer app. It's going to be millions of killer apps, just like the apps economies, because AI will be embedded into many different applications, many different type of cloud services, and so on. The ROI today might still be at the very early stage, but we're seeing that rising. Not only are the US big tech companies spending because of the ROI that they're seeing, we're also looking at, say, retailers, enterprises spending because of the ROI that they see down the line. Efficiency improvement, that's the key.
OK, so where efficiency is key. So where in the value chain is looking most opportunistic right now? Where is there not enough priced in where you can lean into in terms of investing in this space?
Well, the markets are very volatile, and I think where we see great opportunities, as I mentioned early on, networking, because now that we have tens of hundreds of thousands of GPUs installed in various data centers, networking them up to train more sophisticated large language models, that's one of the key areas that has not been priced in yet.
OK, what's the energy play then for you?
Energy play, I think, is still ongoing. I think we still demand more energy, but at the same time, more energy efficient chip solutions, whether it's ASIC or more customized chips. I think demand for those more customized type of lower energy, more power efficient solutions, that's another area that we're looking at, potentially more opportunities.
Looping it back to NVIDIA, they have about a 90% market share in terms of these AI accelerators. How long does that last? How deep is that moat?
And I think GPUs are great, but they're general purpose. They may not be very power efficient. We're actually seeing, for example, customized ASIC, application-specific chips for AI, developing companies such as Broadcom, Marvell, and also some of the Taiwanese companies. I think Asian companies also are well positioned, not just on the manufacturing side.
Are they the main threat to NVIDIA, or is it the hyperscalers developing their own chips?
The hyperscalers are developing their own. The startups are developing their own chips. I think every tech companies are trying to have a lot of these moat on their hands, not
and you see
relying on
that 90% market share being eroded over time.
I think eventually it will erode, but I think GPUs are here to stay for quite some time because it's very general purpose.
Okay, Yentao, thank you very much indeed. Yentao Boon, who is head of Thematic Asia and portfolio manager at Neuberger Berman, on how to get exposed to the Gen AI ecosystem and where you can still find value. Really smart analysis on that front. There's plenty more coming up. Stay with us. This is Bloomberg.
Notion that we would cut rates. Financial markets are wide open. Equities are at all-time high. Financing is available. Real estate prices are going up in every market. And yet we're stimulating. And we're stimulating fiscally. It is not clear that we need more rate cuts at this point in time.
Okay, Apollo CEO Mark Rowan speaking exclusively to Bloomberg, with some caution there as to whether or not we need further dramatic rate cuts from this Federal Reserve. Talking of the Fed, of course, that ties into what we're seeing in the Japanese yen. And let me just illustrate what's happening in terms of the weakness that came through for the Japanese currency yesterday. A drop of almost 2%. You can see it here on the chart. That was the move yesterday. One of the biggest moves lower since we've seen since about 2022. And this is after the new Prime Minister, Ishida, came out. He was known as something of a hawk in terms of BOJ policy. Then he had a meeting with Governor Ueda, came out of the meeting and said, you know what? It's not the time, right, for another hike from this BOJ. The conditions are not yet there. I'm paraphrasing, but that's essentially what he said. And that has seen the markets then phase out bets that you're going to get another hike from this BOJ by the end of this year. And that has led to softness in the yen and a rally in Japanese equities. To what extent, though, is it all about domestic politics of Japan? Because there's an election at the end of October, the 27th, I believe. So maybe that's also a factor. Let's flip the board and have a look at another currency of choice. It's really two currencies that you're salivating over so far this morning. The yen, and here we go, the pound, saying, hold my beer, because there's something going on here as well. Bank of England Governor Andrew Bailey giving an interview to The Guardian saying there is potentially scope for a, quote, aggressive cuts. And so you see a move in terms of weaker pound and the build-out of expectations around the next cut for the BOE. 100% chance, according to traders, that is the bet in November. There's plenty more coming up. The opening trade is next. This is Bloomberg.